Hi, my name's Leon Rowe, currency trader and trading coach at trading180.com, and welcome to this week's supply and demand Forex technical analysis. If you are a new watcher to the channel, welcome, and if you are a returning watcher and subscriber, welcome back. Thank you for returning, and I really hope that you find value in these videos, and I hope you had a profitable trading week last week, and long may it continue with these supply and demand zones. So again, if you're new, these videos tend to be around about 40 minutes, 35-40 minutes or so, and yes, but you can skip to your favorite pair if you want to skip to your favorite pair, and it's timestamped in the description box below. So let's get into the analysis, and we're going to start off on the Dow Jones Dollar Index, right? And let's look on the right hand side of the chart, the weekly first, and you can pretty much see we've come up into this supply zone here, and we've put in 1, 2, 3, of these pin bar type candles, right? This is a very bearish sign, right? Dollar is probably still the strongest out of the major currencies, but like I said last week, there's probably going to be some profit taking going on. There's obviously the Trump tariffs, trade wars going on as well, escalating, so that could have an effect on the dollar, right? So if we're looking at this kind of bearish, 3 pin bar type patterns, this is what it looks like on the daily time frame chart, right? And you've had prices come up into this supply zone, tried several times to kind of try and break through, but obviously we're not looking to buy at highs, looking at pullbacks. If you're looking to buy the dollar, we've come down into this demand zone, right? So if you took advantage of some dollar weakness and profit taking from last week, you would have seen that on other pairs. We're not trading the Dow Jones Dollar Index, we just look at this to indicate dollar strength and weakness, right? So if you took advantage of the dollar strength, dollar weakness on some other currency pairs, then which we'll get into obviously later on in the analysis, then well done to you. And we're now down into this demand zone, right? So what you want to probably look for is some price action, obviously on a lower time frame, if you can get it, right? And if we get to start to see some dollar strength, right, overall strength, then you want to be probably a buyer on the dollar, if it's the dollar, yen, CAD, Swiss, whatever, pound dollar, right? And look to, if it coincides, if that demand zone coincides with obviously a demand zone or a supply zone, for example, then you're looking to probably buy the dollar. If not, you're looking to, that's going to be your first sell. Right, this is going to be your first, obviously, buy if prices do continue to weaken on the dollar this week and maybe into the following week, right? So with that being said, I want to go into the dollar yen, right? Now the dollar yen, what we had again last week, not really that much price movement, considering we are in a trade war situation, right? Haven't moved that far, but I actually am assuming there's going to be some downside because we're in a risk off environment, right? And the yen really should react anyway, typically reacts to and there's a lot of uncertainty and fear in the market, right? So the yen is really the trade, let me get this right, the currency to buy, right? Because again, it's safe haven currency, right? So you could see some more downside, right? And like I said, this is just typically what happens. So you could see obviously a sell-off as the yen tends to strengthen, right? But this would be your first buy if you're looking at buying the dollar, and your second buy. But right now, this might not be a bad position to take and try and enter short into the brand new week, because as we probably get into Sunday evening, Monday, we could see a sell-off depending on how the markets react really to the weekend news, right? So you've got dollar Swiss, right? Dollar Swiss, again, we've come up into this supply zone once, twice, and again the Swiss does fare quite well when it comes to a risk-off environment. So we could see some weakness, and then we could see some potentially this would be your first buying area if you were buying the dollar. If you were looking to sell the dollar and buy the Swiss franc, probably right now, if you had to have your stop, it'd have to be probably above the high. So you might want to wait for prices to kind of, if prices do manage to come back up here, get short. If not, then that would be probably, if we zoom in, this would probably be the swing to maybe put your stop above, right? So those are really your two areas. You do have a demand zone right here, right? Technically, but probably deeper down into this this deeper demand zone is why the demand zone would be better. And when you see like wide demand zones like this, right, one of the things that I do is I look for some confluence like horizontal support and resistance within obviously supply or demand zones, right? And I'll probably get into maybe a later example and the trade setup that I'm actually looking at coming up in a sec on the New Zealand dollar, US dollar, matter of fact, right? So next is going to be the dollar CAD. Dollar CAD, yeah, what we've got is some demand zones here. We've put in supply zone right here, right? So if we do get a bit of a pullback into this level, right, what you're doing is looking again down on either maybe a lower time frame or possibly potentially the daily as well. If you're looking to take advantage of some dollar weakness, right? If you're looking to buy the dollar, this would be where you'd be looking to, your first buy, right? This is where your first buy area is. And again, just looking for some confluence, which we're going to go over in just a sec. So looking at the New Zealand dollar, US dollar, right? And this is a pair that I do want to get short on. So I'm going to do some analysis. So obviously some of you might have would have seen, obviously been reading this this box. And if you're new, this is how really some of the foundation, this is like a foundational step-by-step process that I use to enter a trade, right? So first of all, I'm going to determine value. We can use this on pretty much all of your currency pairs, right? Is really what we want to do is determine value by looking at supply and demand zones, right? So this supply zone would be where buyers or sellers would have deemed this a bargain or an expensive area. So for the if we're buying the actual dollar, right, this would have been considered an absolute bargain right here. Last place we would have considered a bargain, right? Because and we know this to be true really because you can see that prices really went to the downside. Traders started loading up on the US dollar, right here, driving prices down. So when prices do come back up, if prices come back up into this area, this is the first area we want to get short because we know that this is an area and was seen as an area of value, right? And that's really just the premise behind supply and demand. And you can watch. I've got a video, an introduction video into supply and demand, just in case you you want to watch that as well, which is going to be in a link in the description box below. So first of all, we want to identify supply and demand zones, right, which we've already got here. We also want to determine value ranges, and value ranges are really just used. It's just a tool that I use. It's a converted Fibonacci level, which only has the Fibonacci tool, which has the 50% level, right, as fair value, right? Because, and the reason kind of behind this is that we're always expecting prices to range within some high and some low, right? We don't know where that high and that low is, but we do know the first highs and lows tend to be at supply and demand zones, right? So if this was once considered a cheap and a value area for the US dollar, right? Prices went lower. When prices come back, we should be at what we would consider a bargain level, a value level, right? This is fair value, and this would be an expensive area for the for the dollar, right? So what I'm expecting is for prices, right, to range between this high and this low until something fundamentally or sentiment wise changes. So I'm always looking for ranges, and people say, oh, look for the trend, look for the trend. Well, prices trend within ranging markets, right? And what I would mean by that is, let's say for example you took this, a bit of a lesson here, right? But if you took this overall range, right, and if we go back and this was the range, right, we couldn't see anything to the right hand side of the screen. Yeah, prices are contained between this low and this high, this obviously being bargain, this being an expensive area, right? And we can go forward, right, and prices are contained within this value range. And what I'm saying by what I mean by prices trend within ranging markets is that we obviously can see that there was, you know, prices started to trend down at some point, right? If we keep going, right, lower highs and lower lows being made, but it was in the context of this low and this high, right? So prices will trend within ranges, right? So I'm always looking for ranges within ranges and trends within ranges, but overall I like to see a range. And I know this because and I want to see this simply because I know that the market tends to range more than it trends, right? So I'm always looking for at least the first zone where I can try and look for and to establish where prices have been will enter a range, especially after what is considered a trending market, because there's only two market states: either you're going to be trending or you're, you know, ranging, right? So price discovery or price agreement, right? So this is going to be the first area I'm looking to get potentially short or buy the dollar, right, against the New Zealand dollar. So that covers value ranges. Now we need to determine the supply and demand order equation, right? So the first one is horizontal support and resistance. And what is the supply and demand order equation? So we need other traders to look at levels, right, to get long or short, right? And so this adds to where other traders are going to be potentially looking to take profit or enter new trades. So we've got supply zone and supply and demand zone traders, right, and value traders like myself. And then we want to see where a lot of orders are potentially going to come into the market, right? Who's taking profit, which is a sell order, depending on if you're buying or selling, right? So how many sell orders and how many buy orders net do we need to try to look for, right? And what makes sense to us as traders, as far as how many, you know, the imbalance of supply and demand. So we need to kind of justify why other traders are going to also get short. This is obviously known as, you know, confluence and technical analysis, right? So what I know is that there's going to be support and resistance traders looking at this level, right? So 1, 2, right, and into this, the bottom end of this this supply zone here. So if they're looking to enter short, they're going to be placing sell orders. Anyone who tried to or did manage to pick off the absolute lows and ended up buying here, where are they going to be taking profit? You know, textbooks will tell them take profit at, you know, a problem area which they think is going to reverse at, which is going to be this area here. If they bought here, what is their order going to be? Sell orders, right? So we've got sell orders, right? There's another level, a little intermediate level that I do like. Maybe you might not have seen it, right? But this is a level that I like right here. So we've got a bounce off of here, here, and then we've got the top end to here as well, right? And it's also around a round number, which is the 0.69 area, right? And again, round numbers tend to be magnets, and they also tend to be areas where people do a lot of activity, buying and selling, right? Psychological number, right? So look for psychological numbers as well as, you know, in conjunction with horizontal supply and demand, because we know that other traders are going to be looking at these levels as well, and it's going to add to our supply and demand equation, right? We also look to see if we have any diagonal support and resistance, right? Because we know that we got potential trend traders, right? Is that the right one? Here we go, parallel channel. And I just use this simply to look for where trend traders, right? And traders who trade trend lines are looking to also enter potentially short, right? Because you can see lower highs and lower lows, right? This area here looks like a decent area to try and get short, right? Because we're going to have new orders coming in from trend traders. This is an obvious trend, 2 touches, etc. So this is going to be projected into the future. Supply orders and sell orders coming in here, right? And then what do we have? All right, we need to see dynamic support and resistance, and what I use are the 21, 50, 100 and 200. So from an overall trend perspective, I don't use moving averages to determine which way I should trade, because it's sloping down doesn't mean I'm going to trade it sloping down. It's just it's a lagging indicator, right? But what I know traders will do is use popular moving averages, dynamic support and resistance, as dynamic support and resistance, right? So even though we're further up here, right, as far as the 100 to 200 is quite popular, right? And especially first touches when prices cross down, right, below a moving average or above a moving average, and then retest that, it tends to be quite a powerful dynamic resistance level, right? So we've got the 100, 200 here, quite high up, right? So if prices do come up here as well, this could be decent, but down here, we're probably going to end up having the 21 and the 50, which we do, right? And we have the EMA and the SMA, and people say which one is better than the other, use the EMA or the SMA. I'm having both on here because I know traders trade both, right? So these are my dynamic support and resistance areas in confluence with this overall supply zone here. So net, I should have a lot of supply around here, and then you have to consider who is buying. Why are we going to have more demand than supply, right? So the only reason really why you would have that, and what would potentially change the dynamic in supply and demand equation, is simply fundamentals and sentiment, right? But if the fundamentals and sentiment are with you, i.e., the dollar is stronger fundamentally, they want to, better place on the economic cycle, etc., right? Which I go over in the fundamental analysis course, right? If that still holds true, then this potentially should still hold true. There may be some negative sentiment towards the dollar and some profit taking, but wait for right price action and then obviously get short. So net, I'm looking at putting the probabilities in my favor when it comes to supply and demand. Who's buying, who's selling? Why are we most likely to have supply in this area? Put it all together and then see the right kind of price action. Keep an eye on sentiment, right? And then if you get your price action, take the trade. It's only one trade. Don't risk the house. Don't bet it all. Manage your risk and then go for more than you risk, and you should be all right. So this is just not a trade recommendation. Don't do anything that someone on YouTube that you're watching does. Do your own research, but this is my thought analysis and this is my process. And this is just some of the process that I go through. It's not everything, but this is basically just a foundation of my processes, right? Yeah, that's pretty much a trade setup. You can apply this trade setup, the 1-2 ABC, to all of the previous and following currency analysis as well, right? So if you are a buyer, let's go back to the demand zone perspective, right? If you are a buyer, then this is going to be the area that you're looking to buy, right? So that's enough analysis on the New Zealand dollar. US dollar, we're looking at the pound dollar. So pound dollar, let's take this off. Let's go to blank, right? Pound dollar, we're up into this supply zone, right? Which wouldn't be a bad short, to be fair, but I prefer this zone up here for several other reasons. But if you were looking to try and get short on this pair, then this was going to be the area to try and get short, first of all, coming into the new week, right? If I do see some price action, right? One thing I forgot to mention is that I like to see at least 200 pips to the upside or downside within a range. The reason why, because if this is the absolute high of the range, let's say for example this is the absolute high, right? Zoom in, and I take a trade, right, and I put my stop loss above where I think the range is going to be. My stop loss might be 60, 70, 80 pips, right? Depending, maybe a bit more than that. But I know that I've got potentially 200 pips or more, right, to the downside. In this case, I would have, depending on my entry, obviously, I'm going to have at least 200 pips to the downside, right? So it at least leaves me with, you know, a possible 2-to-1, 3-to-1, and potential 4-to-1 trades, depending on how big the range is, if I'm trading it down to the bottom, right? So that's the reason why I like to have at least a minimum of 200 pips to 150 pips, depending on obviously the pair, right? A range, anything lower than 150 pips, I'm not, you know, bothering to look at, right? But the bigger the range, the better I can, the more pips I can kind of go for, right? When it comes to trading within the range, right? So that's just a tip. But if we're looking at this from a sell perspective here, buying perspective, if we zoom out a bit, yeah, we're still within this range here, but we've also got some demand zones probably down at the bottom right here as well. That's probably going to be the next demand zone right there, within that overall range. So what I'm going to do is I am going to, should I get rid of that? Yeah, just to make the chart cleaner, but just be aware, right, that actually, you know what, I'll do it to here so that we know that it has been an area. So right here, right, that's going to be where you should really want to try to get long. There is another one here because we did make a higher high technically, right? So you do have one in here as well, right? Starts to look a bit tight, but you're probably looking at, like I said, if you put the value range on here, right, this will be fair value. You're looking to kind of, if you're looking to be a buyer, you want to buy below fair value, so that's, you know, in a cheap area, right? So anyway, moving on to the pound yen, right? I would say that here again, this could be the range, and what you have obviously was coming up to the range here. If you want to be a buyer of the yen, this would probably be the area that you'd be looking to buy the yen. If you're looking to buy the pound, then this wouldn't be the area you're buying, obviously an expensive area. But also what we do have is some demand right here, right? So you could wait for a pullback before looking to get long on the pound, or wait for, you know, a pullback into this area right here, down at the lows right there, right? Moving on to the pound Swiss. So we've come down into this hidden demand zone right here. Been really just chopping around. I'm going to keep, you know, these levels here, right, and really where they are. So if you do want to try and get short, again, anywhere around here, remember this would probably be where you're looking at the range from that low to that high, or that high to that low, because prices contain between here and here. So that's where the value range would be, and we're at the moment we're at fair value. Yeah. So moving on to the euro dollar. I want to be a seller, right? Probably around here, around this 1.18 level. If we get the right kind of price action, again, sentiment, and again, just looking at where we're looking to range from that low to that high, this would be in the cheap area for the dollar, right? We've also got demand zone right here. Change that to demand right there. Put it from there, right? So looking to be a seller. If you're looking to be a buyer, this would be your first area just below fair value, and then right at the bottom right here. And again, just apply these processes, you know, to see if anything else lines up within your you know, supply zone if you're looking to get short or if you're looking to get long, right? And again, zoom out as well so you can see obviously if there's some trend lines that are in confluence, etc., right? Going on to the euro yen, I do like this, right, as a short simply because of the risk on, so yeah, I should say risk off sentiment, right there. Waiting for the right kind of price action. We do have an area of support and resistance. It's quite a wide area, to be fair. All right, you can see maybe a bit of a spike there. So you've got support, resistance, right, into this supply zone. One thing you also have is, which lines up with it, if we zoom out, you've got this parallel channel, right? So you've got some confluence with trend traders and trend line traders, right, into this area here. Risk off at the moment, right, with the Trump trade, so the yen should want to benefit. Just waiting for the right kind of price action. We are at a 130 round number as well, so we've got that confluence, right? And then we've got, let's look at some dynamic. Oh, brilliant. So we've got some 100 and 200, right, moving average right here. It has been touched, you know, once, twice, 3 times, but and the more times dynamic resistance and support and these moving averages are touched, then the weaker they become. But you know, they can, you know, be touched several times as well. But we've got some confluence here as well, dynamic wise. We're looking at probably the 21 and the 50. We're probably going to be underneath that price. Yep, so underneath price, right? So not much confluence there, but overall value and supply and demand for me rules, as well as fundamentals and sentiment. So this could be a decent trade to the downside. Again, not financial advice, but just something I'm definitely keeping my eye on around here. And if I get the right kind of price action, then I'm probably going to be looking to get short if we're still on risk off mode. So euro pound, move this up a bit. We've come up into this supply zone. Get rid of this. All right, this supply zone here reacted, and then reacted off of this demand zone here. So again, just going down into the lower time frames, like the 4 hour, the 1 hour, whatever time frame you do trade on, and look for your entries, right? But if we're looking at probably looking to trade with between this high and this low, it's a small range, not, you know, less than 100 pips really. So if I was looking to get short, right, that would be the first area, but my preference would probably be up here. If you're looking to get long, that would be the first area, but again, down here, and what you would have to do is, that's quite a wide area, some wide zones. So again, just look for levels that other traders would probably be looking to take, right? And it'd probably be somewhere like here, right? I can see definitely some resistance, some immediate resistance, right, within this area. Sorry, I say resistance, support, right, within this area here. Yeah, so that would probably be the level, because otherwise it's just pure chop within that, and very, very choppy. I suppose you could look to see a bit further back. It was an area. It's not clean though. It's not very clean, so it's not very obvious. So personally, I'd probably just sit out of that one until it becomes you know, clearer. But the pound and the euro is going to chop about simply because of uncertainties around Brexit. So when you've got weak against weak or strength against strength, the market state tends to be quite choppy and rangy, which is normally good, but in this situation I'll probably be looking for something a bit more clearer up here, right? Again, just dragging these value ranges just to let you know and see the overall bigger picture, right? So price is contained between these two, right, between that high and that low, and now we're just chopping around. So at the moment, if you want to be a buyer of the the pound, you're in an expensive area, buying it around the highs, right? If you want to be a buyer of the euro, then this would be, you know, above fair value, right? So below fair value, cheaper area, so you'd be looking to short, right, to buy the euro. If you're looking to buy the did I get that right? If you're looking to buy the euro, sorry, you have to be down here, right? And if you're looking to buy the pound, yeah, this would be the area, right? Trying to get short. So this would be more of the cheaper area, sorry, for the pound, and this would be a cheaper area for the euro, right? Getting that right. But again, prices contained between that low, that high, fair value. And that's the way I look at the markets, right? Going into Euro Swiss. Euro Swiss, we're up into this supply zone. I'm going to move this up here, right? Again, if you're looking to get short, this could be your first opportunity to get short this week. Looking to get long, I'll probably be looking at, again, this level here, just to mark out some horizontal levels for you, right? So I'll be looking at this 1.15 round number around here to probably look to get long, but pretty much that's it. It's pretty much self-explanatory. If you want to get long there, that would be the area. Again, look for price action in these zones if it does, you know, tend to go there this week. Euro Aussie, what have we got? So this moves up to about here, and we're really just into this supply zone. So again, actually I'm going to get rid of that one. So come up into here, so we could see some shorting action right here where we are, or buying potential right in these zones there, right? Again, look for these confluences to add to the trade. Going on to the Aussie dollar, right? Aussie dollar is really within this demand zone here and this supply zone here. Now, again, for me, I don't like to trade that tight of a range because it probably looks like around about 130 pips. So that might be enough maybe if you're trading on the lower time frames like the 15-minute, and if you're looking to potentially, you know, maybe risk maybe about 20-30 pips at the moment. If you get the right price action, you know, you could trade it down and get maybe, you know, 60 pips down to fair value, right? But for me, it's not enough. I need at least 200 pips on this pair. So I doubt I'll be trading this to the downside. But again, just going down to the 30-minute, you might see something like this, because again, this is the overall range on the 30-minute, right? This is what it would look like. Just take that off, right? Move that out, and this is what the range looks like on this time frame, right? So right now you're trading at a bargain area for the US dollar, right? And then pretty much you're looking to trade to the downside, right? Looking at the last pair, which is the Australian yen. Now the Australian yen, if we go back to the daily time frame chart, I was in this trade from last week and the week before, matter of fact, but with risk off, I don't really expect this price to really kind of move higher, so I kind of took profit, bagged myself about 90 pips. So I'm looking at probably to the downside, but if we can get, you know, some you know, bullish price action up into this zone here, this would be the first area I'd be looking to get short on the Aussie yen, and then this would be the first area I'd be looking to get long if I was a buyer of the Australian dollar, if risk on returns, right? So with that being said, that is your options, and that is the supply and demand analysis for this week. I hope you enjoyed the supply and demand technical analysis. If you have any questions, just email me at info@trading180.com or comment in the section box below. Hope you had like I said, found this very useful. Please like, please subscribe, please share, and I hope you do have a great trading week. Take care. So if you'd like to receive the best supply and demand Forex levels absolutely free, click on the link in the description box below, enter your email address, and we'll send you the levels that we have just analyzed in this video. You'll get all of the major Forex currency pairs, and you'll get regular updates and never miss a Forex trading opportunity.